moving or relocation expenses, all these they are not permissible, or they cannot be capitalized to an item of intangible asset under IS 38. And would it be established that such expenses were recognized using the previous cap, then the cost must be derecognized as soon as the reporting entity has decided to follow the provisions of International Financial Reporting Standards. Let's look at reclassification. The entity should reclassify previous GAAP opening statements, statement of financial position items into appropriate Ifrs classification. For example, under International Accounting Standard number 10, we are saying IS 10 does not permit classification of dividends declared or proposed after the statement of financial position date as liability at the balance sheet date. So if it does not permit that, what it means is we should reconcile or reclassify such items in line with the standard that govern the preparation of financial statements pertaining such element of financial statements. So if such liability was recognized under previous GAAP, it would be reversed in the financial statements. It should be derecognized, or it should be reversed, or it should be reclassified to put it under where it is supposed to be reported. So with me here is a reconciliation of equity and total comprehensive income, where we are moving from, if you look at the first column, this is previous GAAP, and then the second column is the effect of the transition from the GAAP to the Ifrs, and then the last column is the column where we are presenting the financial statements in line with the International Financial Reporting Standards. That's why it is labeled Ifrs. So you can see that we have got the first item, which is property, plant, and equipment. And under the previous GAAP, this element had 8,299. And then we are saying the effect of the transition is resulting in the further recognition of 100. What it means is there was an item of property, plant, and equipment that was not recognized under the previous GAAP, but that would qualify for recognition under Ifrs. And then our last column now will be a result of the 8,299 plus the 100 that was further recognized, and then we end up with 8,399. So here we can see that there was a further recognition of an element of PPE. Then the next line item is goodwill, that had 1,220, and there is a further recognition of 150 to make it 1,370. Right. The next line item is intangible assets. Our intangible assets had 208. And now look at what happened to the effects of the transition. What happened to my slides? Someone is tampering with my slides. Is this Tino Tender? Tino Tender, what are you doing? So we are saying the intangible assets had 208, and under the intangible assets, the previous gap had recognized an item worth of 150 that was not supposed to be recognized if the reporting entity was following international financial reporting standards. And therefore, the effects of the transition now would result in derecognition of 150. And then our last column will be 58. So that's the effect of the transition. We have derecognized 150 worth of intangible asset, which was previously recognized when the reporting entity was following GAAP. Is that clear? So the next line item, the same 420 worth of financial assets were left out using the previous cap, and now they are being recognized. So that's the conversion. If we look at current assets, trade receivables, which was 3,710 under previous cap, the effects of the transition, there is no change. So what it means is trade and other receivables under GAAP and under Ifrs, they were being recognized the same way. So there is no difference. And then for inventories, we can see that the inventories under GAAP were 2,962. However, there was a further recognition of 400 to end up with 3,362, which means under the previous gap, there were items of inventory that were not recognized. But now, if we consider the International Financial Reporting Standards, such must be recognized, and it was worth 400. And the same applies to other receivables. And if we look at cash and cash equivalents, we can actually see that there was no change. What it means is the gap principles and Ifrs principles were almost the same. So this is a continuation of the conversion that we were looking at, and we cannot waste time. This is actually the same as I have explained. And the same here. Let's now